Hello traders, welcome to another Trade Your Way video. This is the second part of my backtesting series. The first one covered the 764 strategy. This one's going to cover the MT strategy, or the momentum strategy. So let's dive right in. Okay, so I'm not going to go into too much detail about everything that we've covered already in the last video, which was talking about the 764 strategy. So I'll put a little link so you can link back to the 764 strategy and how I back tested that, and how I applied it to helping me pass the FTMO challenge, because I did an FTMO challenge, as some of you are aware, just for the sheer fun of it, just to see what it was all about, see what the pros and cons were, and just to identify. And now I'm focusing on my 3 strategies, so I'm going to do 3 videos covering how to backtest my 3 strategies and how to apply them, to use them, in 2021, to help you pass the FTMO challenge, and not only pass it, but to keep the account, to become a funded trader, but then stay funded, don't lose the money, don't blow the account, etc. So I think it's very important to go over some key factors when it comes to how to backtest. So there's going to be a lot of emphasis on backtesting. There's going to be a lot of repetition in terms of going over the same stuff, so you might want to scroll through some of it, but if you want to just stick around, there might be some things that you haven't yet taken into consideration. So let's have a look. So how to backtest, key factors. Okay, understand how the strategy works. So today we're going to be talking about the MT strategy and how that works, the momentum strategy, how that works, MT for short. Select the instrument you wish to backtest. So for me today, I'm going to use the pound dollar as a cable, because that's been very kind to me in terms of success and profit over the last year. I am going to scroll back over the last, well, I'm not going to scroll back over the last 12 months, but I would always suggest scrolling back over the last 12 months of history and data as a bare minimum in terms of how to backtest. Ideally more, 12 to 24 months. Number 4, backtest on multiple high time frames. So this is the work that you're going to have to do. There is no shortcut. Doing the work is the shortcut. You've heard me say that. I've picked that saying up. I like that, and I'm going to roll with it, especially when it comes to trading. There's no quick fix. There's no way of cutting corners. People don't want to put in the work, and people keep ducking out of stuff that I say to them to do, and they're like, well, you didn't get back to me, and it's like they want me to hold their hand and to make them money, which I find a little bit outrageous. And I just think you're too much living in today's society that's all about instant gratification. It's quite sad, really. So there is no quick fix, unfortunately. So number 4 is backtest on multiple higher time frames. So for me, it is about maybe taking 100 trades on the 1 hour chart, and then a 4 hour time frame, and then the daily time frame, the weekly, and then the monthly. Going back over as much data as you can. You'll find that you won't have to do so much work on the monthly and the weekly, as opposed to maybe on the daily, 4 hour and the 1 hour, because there won't be as many setups, because things take a lot longer to develop and set up and play out on the higher time frames. So it's not like you've got your work cut out for you in that respect. But when you start looking at at the 1 hour time frame, and the 4 hour time frame, and the daily, then yeah, you probably will find 100 good setups. So when you do find these setups, number 5, just keep it simple. Understand your risks. So for me, I was saying to people that are funded with the FTMO, once you are a funded trader, just risk 0.25%, 0.25%, 0.25%. It doesn't sound like a lot, but when you've got 100 grand, or 200 grand, or 300 grand, or $500,000, or $1 million, or £1 million, when you are a funded trader and you've got this big amount of money that you're playing with, the last thing you want to do is risk 5% or 10% or go crazy trying to get rich quick. You've done all that work to get there, so 0.25%. You'll make plenty of money to live comfortably. You're in it for the long haul. Give yourself 3 to 5 years. Have a look at my 5-year trading plan video that I've got as well. I'll link that one. But do appreciate and understand that you're in it for the long haul. You're looking for life-changing way of working and living your life. So when you find a setup, set your entry, stop loss and target. Now for me, I have 2 targets. We'll go into that when we start backtesting live. for those that have watched my videos and traded with me and part of my Telegram group and part of the Discord, etc., you know that I have a T1 and T2, and you understand the reasons why. But we'll go into that in a second as well. Record your results. Record your results in a trading journal. Now I've gone over a trading journal. I've created one that's specific for backtesting, and then also I've got my own one. I've already shared them in my previous video to do with the 764. But we can look at them quickly again just here. So I'll just quickly show you. This is an example of a backtesting spreadsheet. I will provide the link to it. It's in my cloud, my box cloud, so you can get a copy, gain access to this. So number of trades. You want to do 100 trades. You want to put your balance in. So if you're a managed funded trading, you've got 100k. You want to put 100k in there, and then you want to work out your average. Average win ratio and what is your percentage of winners, losses, etc., total gain, and then put some comments, draw down. Take a note. You can tweak this as how you see fit. Okay, so hopefully you find it of value. As I say, it's in my other 764 backtesting video. Again, this is it's a bit wonky there. There we go. That's an example of my trade journal. So that one, this is for the month of November 2020, so I had a good month, so I thought I'd show that off because it's just got one splash of red in there. So the hit rate was pretty decent out of all those trades. Had my best ever month, and that was because of situations going on in the world, to do with COVID and whatnot. It just presented volatility and volume which I was able to exploit and capitalise on. So hopefully that gives you some idea of what a trade journal looks like. Again, I can go into detail with that. I can provide you a link which is in my box, and I'll put it at the bottom in the details of the video. So let's crack on with this. Let's quickly scroll those key facts. I just want to do a quick recap. So 3 tips just to go over them again. So things when you are planning and when you are back testing and when you are forward testing and when you're taking trades, the same principles apply. When you forecast and plan, look for a T2. So why do I have a T1 and a T2? Well, because I think sometimes people get a bit overexcited and they'll see potential to make maybe 100 pips or 200 pips or something like that. And so they'll be like, okay, yeah, I'm gonna put a 10 pip stop loss on, and I'm gonna look for a 10R, or a 10X. This is all the jargon you hear nowadays. And it's like they're looking for some Superman style heroic trade, and then they can maybe brag to all their friends and they can massage their ego and say, look at me, I risked 10 pips and I made 100, and it's all like that. And it's just like, well, I mean, you've got nothing to prove to anyone but yourself. So don't get too overzealous with your trading. Don't get too excited. So of course, forecast and plan for your T2, but have a T1 in there. Think about where you could maybe, for me, for example, have a T1 which would generally be at a 1-to-1. So if I'm risking 30 pips, I'll be looking to make 30 pips. If I'm risking 0.5%, I'll be looking to at least bank 0.5% or move my stop to break even and take partial profit that guarantees me a risk-free trade. And worst case scenario, I might make 0.5%, and if it runs to T2, then I might make 1%, 2%, etc., etc., which is great. Again, recapping on tip number 2, focus on the last 12 to 24 months. So look at the first, go back 12 months, and you'll see that things generally stay the same. But because it's all human driven at the end of the day, and you'll find that patterns evolve ever so slightly, but human behaviour doesn't. So you can look back over the last 12 months or 24 months, depends how much work you want to put in on this, but I'd say collate a decent amount of data over a decent amount of time, and you'll see that human behaviour doesn't change all that much. And so you'll find these setups, and you'll be able to then give yourself some confidence and reassurance that the strategy works, the confidence to actually see the setup and take the trade without second guessing yourself, which is what this is all about. This is the power of backtesting and why it's so powerful and relevant. Tip number three, don't put too much emphasis on a smaller time frame, on the smaller time frames without considering the higher time frames and overall trend bias. So a lot of traders keep trading off a 15-minute chart, 5-minute chart, even a 1-minute chart, and that's fine. It's okay to do that if that fits your profile, your kind of personality as a sort of trader. You're more of a scalper. You're looking for a quick in and out 10 pip move. Absolutely fine. But don't neglect the daily, the weekly, the monthly charts. Understand which way is the market going. Is it bullish on the day? Is it bearish on the day? So the trend bias. So it could be that we're in a downtrend, but the trend for the day or the trend for the last few days has been bullish because it's in a corrective pullback, and so that corrective pullback, as seen on a daily or weekly time frame, could be yielding 200 to 300 pips, depending on the instrument you're trading. So understand that and always acknowledge it. Don't just jump in on a 1 minute time frame, 5 minute time frame, 15 minute time frame, because the likelihood is that if you don't get the trend right, those moves can really chop you up, especially when the trend resumes and you're trying to take a counter trend trade. You're going to lose. The probability of success is not high at all. Okay, so always bear that in mind as well. Okay, so now let's without further ado, let's dive in. Right, this is my pound dollar chart, pound dollar time frame. I'm looking at the daily, weekly, and monthly. We're going to do a top-down analysis. We're starting with the monthly. I'm just going to chuck up my other chart of the pound, and basically to explain the MT strategy and to put it into some, give it some context. Buy the pullbacks and sell the pullbacks. That is the foundation of what the MT is all about. Momentum. So the last thing you want to do though is, if the market is in a trend, so if the pound is in a bullish trend, the last thing you want to do is buy the push. So you never buy these pushes. You wait for the corrections. You'll always get a correction. So wait for pullbacks, then you buy. Wait for pullbacks, then you buy. And with momentum, what that tries to do is help you get into the move. So if the market is trending, this is what the MT strategy is all about. It's about being able to identify that we're making, in this case, if it's bullish, a higher low. So we make a high, then we pull back. This is a higher low to this one. It's not taking out this low, and we're going to continue up. And then we wait for the pullbacks and never buy the pushes. So these are the pushes. So you see it, and you get this feeling of FOMO, fear of missing out. You think, oh, I want to get on this. I want to get on it. Okay. But then the problem with this is, you never know where it's going to where it's going to stop for a breather and then do a corrective pullback. So it's going to go up, and you're going to buy it here. And say this was a daily time frame, this might move 50 pips already, and then it's pulling back like 30 pips, and your stop might only be like 20 pips. So you're going to get stopped out before you see it go in the direction that you want. So patience is so important, and that comes with practice. And what the MT strategy looks to try and do, what it aims to try and do, is try and help you with a decent entry. So that way you're getting a sniper entry, low drawdown, zero drawdown sometimes. Your timing's great. You're buying the pullbacks. And how do we do it? So let's take this one first off. So we'll identify the pullback, and what we'll do is we would straight away plot some fibs. So we've identified the range. It's going up nicely. There's the high. There's the low. What do we do? Drag it across. You see it's pulled back 50% before it goes and continues long. So then once it makes, if you didn't get on this move, where it's done a 50% retracement, and you enter here and then tuck your stop in underneath, then you have another chance to get in. That's the beautiful thing about the strategy, because when it's a trending market, you don't miss out. You don't miss out. You never buy the push phases. So if it's pushing like this, and you're not getting in at this level before it breaks the previous high, you're not getting in before it breaks the previous high, leave it alone. Wait for it to do a correction, because it will drop back. It'll drop back and probably retest previous structure. Then at this point you can get in, and you can take it up like this, and you can do something like this with a continuation. You take that high out and make a new high and do an extension. Then it pulls back and maybe comes back to test, and then it shoots on up like that, and probably just finishes the move, something like that, to maybe give you 30, 40, 50, 100 pips, or whatever it is. And then what you do is, to put this into some into some context, you get your put your trade on and say, okay, I'm going to buy here. If you didn't buy there, you buy here, and you do something like that, and then you can tuck your stop in. And that is what momentum. This is what momentum is all about. It's about capturing this move and capitalizing on this move, and not missing out on this move, and making the most of this trending market, because a lot of people will see a trending market, will see a trending move, and you think, damn, I want to get on that. But the problem with it is that you're buying the push, and if you buy the push, you end up buying at the top of this move, which is really, really bad, because it goes against the basic principles of trading, which are to buy it when it's low and then to sell it when it's high. And the same can be said to the downside. So, this is an example which you all understand. If you're trading, you get it. So timing is key. It's vital, in fact. A lot of people get very impatient. And some people even try and catch the top of this move. Straight away, it does some of this, and they're trying to short it from here, thinking it's just going to go into a range, when really it's a trending move, or the start of a trending move. And how do we know that? Well, we probably have some fundamental news, something from maybe the Bank of England, for example, if it's the pound dollar, announcing something that's good for the pound, like we had this week, where they said they were going to keep interest rates unchanged and keep it all the same. And so we knew that the pound was going to rally, or I knew that if they didn't make any changes, if they didn't cut rates, pound would remain strong and bullish bias. So we'd be looking to buy with our momentum strategy. So hopefully that makes sense, and this is how we use the fibs. Then obviously, if you want to build further confluences, further reasons to justify the trade, you might have some EMA, some exponential moving averages, which might come in, and they might provide some support as they come underneath here. You might use, maybe, for me, I use an 8-period moving average, which helps me stay in the trend. And this will be on a 1-hour chart, and a 4-hour chart, and a daily chart, because we're intraday trading. We will also look at the other EMAs, which will be a 21 EMA, a 50 EMA, and a 200 EMA. Okay, so that gives you some idea of how we do it. Hopefully you can take notes here and understand. So that way you don't end up taking the trade up here, putting your stop here somewhere, getting stopped out, only then to see it go up. How many times has that happened to you? So don't buy the push phases. So in the downtrends, the same principle. When it's going down, it goes down quite hard. You know, though, that it will find some support and it will bounce. You sell it on the pullbacks. Now, that's what MT looks to do. It helps you become a bit more of an aggressive trader, but with a little bit of purpose and a little bit of structure. So take your fibs, and you identify where the pullback's going to be. In this case, you've got a 38.2 pullback. Now, note, with the MT strategy, I am only looking primarily for a 38.2 pullback retracement and a 50% retracement ultimately, because the idea is that if we have momentum and the markets are going to go into some sort of a trend, and we're using an hour time frame, for example, then we do expect to see some sort of a quick move down, quick pullback, and then a continuation, take out previous low, complete the N shape, and then extend and keep going. Okay, so we're looking for that momentum, we're looking for the start of the trend, and we're trying to get in as early as possible, but we don't want to be getting in when it does its first push phase, but we want to identify that it's doing a push. So any little pullback we want to get in on, and so we were looking for the smallest pullback. At the end of the day, if you're getting in early, then the smallest pullback will be to here. But then how many pips in terms of risk and stop loss are you going to have? You're not going to have that much. You're only, in this case, going to have maybe about 15 pips, because you're getting in early. And you're getting in on a nice little retracement, and you're ensuring that you've allowed the market to pull back and to confirm that it is going to go down. So your stop loss is going to be here. And the beautiful thing about a trending market as well, people will ask me, where's the stop loss going to go? Well, it goes behind the previous high, which would be here. If you don't get in on that one, then the MT strategy will help you get in on the second move down. So it could be something like that, which in this case would be, it pulls back, it's gone there, and then it's gone down, and then we've waited for the next pullback to 38.2. We enter somewhere around here for a short, and we would do something like this. And our stop loss could then be just above the previous pullback, because we're in a trending market. And what does a trending market do? Well, it makes, in this case, trending to the downside, it makes lower highs. So we've gone down, we've pulled back, but this is a lower high, hasn't taken out that one. We're continuing short. it's basic price action. It's price action 101. Okay, so you all know this, but you also want to understand how to get in, and timing is so key. That's why I always time my entries, and I get very good sniper entries, because I wait for these pullbacks and I understand how to apply support and resistance, in this case the fib levels, which is so key and so vital to this. So again, then you can add trend lines, you can add EMAs, and you can build further confluences, but primarily the fibs are the ones that all play the part. And then you're looking for you're looking for the continuation to capitalize, which would be something like that, and then just finish off the move, whatever it is, down to like the fib extensions, or making new lows, etc., etc., or down to a round number. So that's the principle. These are the basic principles of trading. Now, I know a lot of people will try and get in a bit too early. They take this to another level by trying to find the tops and the bottoms in a move. So we're in a downtrend, but straight away they'll try and buy it here. You get first move and they think this is just going to go up and up and up and up. And what will happen is, if they don't get in properly, they'll end up getting in somewhere like here, only then to see it drop down, stop them out, and continue short, where they should be going with the trend, because it's a trending move. And so they don't clearly understand that. And so the MT strategy is what helps provide the entry, helps you get in and understand simple use of fibs. That's all. And you're not selling these push phases. You're waiting for the pullbacks to sell the pullback. Same here. You want to buy. You don't buy the push phase. You don't buy this thrust up. The volume is basically the banks, institutions. They're pumping the money in. They're the ones taking all the risk, because they're the ones actually moving the market. So that doesn't happen all very often. Only happens maybe 20% of the time. So to put that into context, maybe once a week or so, you'll see some trending markets, some decent moves. The rest of the time, it could just be range bound. It could just be wiggling up and down. Up, down, up, down. No trade here. This is no trade. But this is where people sometimes think that they can trade and make their money. But we're waiting for the markets to actually, waiting for it to do something like this. And so often the catalyst that provides the motion, the engine, the fuel for the engine to kickstart proceedings, is often fundamental news. So I always talk about fundamentals. So it could be an interest rate decision. It could be, some unemployment figures, something that's going to kickstart a move. And so that's what we're looking at. So that's the principles of the MT strategies. Now let's put it into context. Let's apply it to the market. So let's have a look at this in a little bit more detail. Let's have a look at the pound dollar. So I've got this on a monthly. So first things I do is plot my fibs on the high time frames. So the last swing high is up here around 143, back before the referendum for Brexit, before Brexit took place. Okay, so before Brexit we were trending up. We had a bit of consolidation, because we knew for a few months we knew that we were going to have a vote to either stay in the UK or leave. Now, had we voted to remain, in the EU, in Europe, had we voted to remain, and the Remainers had won the vote, then we would have seen a strong pound. The pound would have just gone up. It would have just kept going. It would have been bullish, and we may have plotted some fibs then to start looking at, something like this, to see it go up and test the 50s. The next stops at 145. And then maybe up to 151, etc., etc. Stay bullish, but it didn't. In this case, it stuttered and it stalled around the 38.2. So I'm looking at high time frames because I want to get a bigger picture. I want to know what's going on. We've been in a downtrend. We've had the pullback. Brexit was they voted to leave, and so this is what happened. We've had a sell-off, and right now Brexit has finally, after 4 years, been resolved. So what's happening? Now that that's done, that was an impulsive move down, we're in a corrective phase back up. So we're working our way back up to this previous structure, because Brexit's been sorted. And just to give you some idea what happened here, so we had, on the first move, we had a 764, there we go, 764 move down before it bounced, and then we continued down, previous low, and then we've started knee-jerking up and down. Here was the pandemic last March 2020, so we had dollar strength come in, so that's what that reaction is. But it's good to see what's happening on the bigger time frame. So right now we're at the 76.4, around 136.76, so we are stalling around here. You can see the last month's candle was quite It was quite weak doji. So what are we looking for? Well, we're looking for momentum, still bullish until proven otherwise. So we'll drill down. We'll look at the weekly. What's the weekly doing? Well, the weekly's been bullish, really nice bullish momentum. So bullish bias. So I'm still bullish on pound. I'm thinking that if we can break the 76.4, then we're going to go to 140 and maybe higher, maybe even 150 and above. That remains to be seen. Right now, we've just been consolidating for a few weeks and a few months, and we're thinking about what to do next. And we've had some good knee-jerk reactions off this 76.4, so you can see it's starting to level off. So we're waiting to see if we're going to see another pump, like another drive up, or whether we'll see a correction. So for me, bullish bias when we start looking on the smaller time frames as well, and high time frames bullish until proven otherwise. We haven't taken out any of the previous lows. We're still making higher lows. Again, when you do it on a daily, you can see still making higher lows. Okay, so what was I looking for? Well, I was looking for bullish buys, buy the dips. So when we drill down, this is this week. When we drill down, I was looking for some momentum to an excuse for another play to the upside. And so, for me, it was all about the Bank of England interest rate decision being announced on Thursday. So I said to my Telegram group, and I said to everyone, I'm gonna, I don't want to be taking any shorts on this. I don't want to be trading pound pairs. I'm looking for longs. If they keep the rates the same, which I think they will, I'm looking for longs. So I'll welcome this trickle down. I will welcome this correction. So I'll drill down to like a 4 hour. I'll take that last low, which is here. I'll find the high of this range, which I think was this one actually. Let's just stretch that across. So again, it's all very much about using the fibs to establish the highs and the lows. We've come down so far to back down to 136, testing previous structure, which has been tested once, twice, 3 times. Will it stretch down to the 764? Well, because we're getting close to that news, I would wait and see, but I'd like to buy it off here. So I'd like to see it go down to here to around 135.80, and I'd like to take a long. So I'm interested in taking a long, and let's see what happens, because then if we can get some momentum, we'll use a 764 strategy with our momentum to drive the price up. And so this is how we use our strategies, all 3 strategies coming together often to form a hybrid strategy. And often the beautiful thing about my strategies is that I would have, in this case, potentially 2 strategies that would make it very powerful, a powerful move, because 2 strategies would be in play. 764 is not in play just yet because it hasn't got here. You could short it down there, but it's a counter trend move, so I'm not keen. So let's just see, let's see how it plays out, and let's see what we find. And so back testing would be, okay, I'm looking at that. Okay, we've come down here on the next candle. This is a 4 hour chart. Now I'm interested. I'm interested in looking for longs. So let's wait again for the 4 hour. I mean, if we're doing it on a daily, we would wait for the daily close. Okay, so having to see that play out on a 4 hour, I would have to drill down to say an hour time frame and have to see exactly what's happening. And sure enough, you can see that we've had a decent pump up. So for me, where would I like to get in? Well, I would have liked to have got in here, but this is real life, and for me, backtesting doesn't always present you. It presents the opportunities, and it's doing exactly what I thought it might do around this level. But sometimes you just, you can't get in on it. So it's all right to note it down if you're backtesting, but you can also say that, as part of your backtesting, I saw the setup, but I didn't take the trade because I wanted to wait for the close of the next candle. And all of a sudden it thrust itself up. So in an hour, it went up quite quickly. So what I was talking about in terms of momentum, I'm looking to buy the dips, the pullbacks, but with this 1 hour, even on a 4 hour, we've not had a pullback yet. So do we get it on a smaller time frame? Maybe a 30-minute or a 15-minute? Sure, we can see some hesitation, and maybe you could justify getting in using a 15-minute chart and a 5-minute chart. And we could see then, what sort of move that we got here. And we could have gotten in maybe at 136.30 with momentum. So this is momentum. We're looking for pullbacks. And sure, it's gone and flown up. But where would I have looked to have taken this trade? I would have looked to have identified that we're in a bullish move off the 764 of that last range, and with momentum, we've got good momentum. It's solid. The news has come out. It's 12 o'clock UK time. They've just announced that they're going to keep the interest rates the same. So I'm looking for longs. I'm looking for an impulsive move up. Great. I'm looking for momentum. Great. Bullish. It stalls here. Could I get in here? Yeah, I could have maybe. I did note when we were doing the live session that I could have gotten in at around 136, 135.80 to 136, which was the initial move up, because I was looking on the smaller time frames as well, 5 minutes, 15 minutes, even a 1 minute, because it's news and you want to see what sort of move we get. And I note here that we went up a bit and then we stalled for a bit and then it just continued up. So had I captured this move, which I didn't, and I thought, as part of my backtesting, I thought I'd show you an alternative. It's not always going to be roses and all very rosy and easy, because trading isn't. It's not an exact science. So I thought I'd use this example because this was actually one trade that I missed, and I felt very frustrated, and I had to deal with my own emotions. I was a bit pissed off, to be fair, because it was a trade that I was looking to get in on, and I'd planned it, and I'd accounted for the fact that we're having this news, but I had failed one of my key tips, and one of my key tips was to account for forecasting for T2 and also managing the risk. Had I thought about it properly with this impulsive move, I could have jumped in with my trade plan and said, okay, I'm going to put 1/4% down here and I'm going to keep my stop here. So what's the worst case? It comes back, and then I'll add another position if it finds support here or does a pullback with the MT strategy, and I'll buy and I'll go long with it. And I didn't, because I hadn't planned it. So it had nothing to do with the strategy. The strategy, had I applied the strategy without thinking, without being emotional like a robot and just do it, I would have made a good profit on this move. It would have been absolutely fine. But because I wasn't planning it, because I hadn't planned correctly, and because I hadn't focused, and whatever the factors were, it was me. I didn't react to it properly, and I didn't apply my strategy. And so I was kicking myself, because you see these moves happen all the time. And that's what the MT strategy is supposed to do. It's supposed to help me take the trade. And had I just said, right, I'm going to apply my MT strategy, and I'll use like a 15-minute chart or a 5-minute chart as it's going up here, I'll jump on this, put my trade on. It would look something like, I don't know, it would look something like this. Put it here, jump in on this pullback, something like that, and then put my stop somewhere down here for below 136, for example, maybe 135.95, just below that round number, because I could envisage it maybe pulling back before going, and then we'll buy with momentum. Then great, get that. So you don't want to get the push phase, but you want to wait for pullback. So we get pullback, but of course it done one pullback here, and then what we would look to do is use a target would be a 764. Which would take it up to about 137.15 or so, 137.10, which I'll show you in a moment. Actually, let's see if we can drill down a little bit. It would be something like this. It didn't quite happen, but I know people wanted to see how we use the MT strategy, how it works, give you some better perspective and clarity on that. So hopefully this video has gone some way to explain that. Hopefully you'll find it useful. Hopefully you can link back to my MT strategy. Hopefully you can follow me in Discord and Telegram, and you can ask for ask questions, and we can go through a couple of different backtest the MT strategy on other examples. But I wanted to talk to you about this, and even sometimes best laid plans, it doesn't work. Even someone who's been trading for as long as I have. But yeah, there you go. So what would I have done? Okay, find other entries, and I think for me here, the reason I didn't capitalize on this move was because I was in a live session, and I think because I was in a live session, I felt obliged to play it safe, because there were a lot of people watching. And I thought, well, I don't want to jump in on the trade with them watching me, because it's quite an aggressive move up. And I don't want to feel obliged to actually manage their expectations as well, because then they would copy me, And knowing them, knowing some people, they don't stick to risking 1/4% or 0.5%. They'll go in with putting their house on it, their life savings, to try and make a fortune on a trade that I've called, because they believe in what I'm doing, maybe. And that's not what this is about. So I wanted to discourage that. So I felt a bit obliged, and I think that's what held me back from being aggressive on this. So yeah, there you go. Unfortunately, it didn't pan out. But Let's see what happened. Let's drill up to the. I don't know. Let's stick it on a 15-minute chart. Let's stick to that, and let's just see what would I do. Right. Well, I want to plot my fibs. Now that we've identified the low, you can do this on a 1-hour chart or a 15-minute chart or a 4-hour chart. It's entirely up to you. And we'll find that, and we'd look for the 76.4, which would be around 137.12. So 137.10, because you know I always like to round it down. So that would be my target for my MT strategy, getting in on the pullbacks, trying to find a pullbacks using a 5-minute time frame, 15-minute time frame, and putting your stop, as low as you can below some key structural support. In this case, we've got 136 as a round number, so that adds as that's a psychological level which I would use, and put my stop slightly below that, because I don't want to risk the whole of this. I don't want to, I don't want it just to drop on me and fade completely. If it goes back down to 135.70 area, then I know it's going to break, and why risk another 30 pips? No, not necessary. And there we did have another opportunity to take an entry when it went up to that 38.2. Let me just pull this across very, very quickly. We did have an opportunity, and so I did take a trade. I did actually get in, but my entry was a bit lousy, and so I didn't. It was with the MT strategy, so I did take some profit off this, but it was more of a scalp, because it was a strong impulsive move, and we didn't really get a pullback. It was this one I got in here, so it was about half an hour or so later where we did have a bit of a pullback, and I did take the trade with the MT, but I was a little bit emotional, shall we say? So I wasn't, I was thinking more a case of fear of missing out. I don't want to take too much of a risk, because I'm noting that we've already had a massive move to the upside, so I'd rather wait for this to pull back. I know also that the pound, how it moves, how it behaves, it can be a bit fickle. So basically all I did was I put my stop loss just below that last, just below the last bits of price action here, using the smaller time frame on the 5-minute, and I put my target up here at 137.10. Now, did I hold it? No, I didn't hold it. Was I getting in and out of the market? Yes. So when it made this knee-jerk reaction to the next fib, which I believe was a 50, because I know the pound loves the 50, when it got to there, which was around 136.60, I took some profit off, and then as it went up here and consolidated and pulled back, I entered again and took it up, and took it up to the 61.8, and then I did one more trade and took it up to 137.10. When it broke 137, I think I closed it at around whatever the move was. So let's just see how it played out. I can't remember the price action, but I know I was monitoring it on a 5-minute and on a 10-minute, and sorry, 5-minute, 15-minute, and a 1 hour. So yeah, we had this move. So I got in here, took this money here, and then we had the pullback. So got in about here, and took it up to the 76.4, which let's see how it plays out. And my stop loss again was at the previous low, because it's an MT strategy. We're looking for support, so you can see it's pulled back to the 50% area. Also, the it's making higher lows. So note this: it's making higher lows. Can you see that? Higher lows, momentum. We're going with the trend. It's making higher lows. So we want to take some profit when it goes up. Then it does all this faffing about consolidation. Let's just drag it across, and actually tell you what we'll do. You know where the target is. Let's just get rid of that, so you can actually see what it does, because it does get there. But this is how I know how the pound moves, and this is how it moves. And this is why I know that it's going to faff about like this, and it's going to do all of this. So we get this move up, but then instead of it just going up in a nice straight line move. So if it was like gold or the pound yen, I took some trades, some money off the pound yen as well, and that moves a lot sweeter and a lot cleaner. It was a lot more crisp. This decided that it wanted to faff around a little bit. Let's speed it up a bit. Let's get on a 15-minute time frame, so we can actually see what's going on here, because otherwise we're going to be all day. it will get there. I know that we have the pullback, but because it's trending, empty strategy, you could then say once it's once it's made its move and established the high and the low, pull those levels back, just like I did when I showed you the back testing on the 764 strategy, how I manage my risk, how I manage my position. I would then put some fibs on this range and manage this pullback. And I'm looking, if that low doesn't get taken out, let's just see if it holds. Then I would look for that, and I would look for the longs back up. First target would be 136.87, so 764, this range. Ultimately looking for something to get up to there, but then ultimately again looking for a fib extension, 127 fib extension, which ties in really nicely with my 137.10 area, my 764. And again, let's just put it on a higher time frame, 30 minutes, so we can speed it up and just see how we're playing out. I'm trying to show you how I would manage this trade and how I did manage it, but because I got in later, it wasn't one that I wanted to brag about, because it was just about scalping, taking small impulsive moves. So every time it went up, bank, pulls back, get in, bank, pulls back and get in. I think I took about 3 or 4 trades on this and got in. Eventually it's making higher lows, but this one here, look, pulls back, tries to take out previous structure, and then eventually got there. So that's, you're going to have a reaction off that 764. Let's see what sort of reaction we get. Understandable, you're going to get a deeper reaction. Again, just using my fibs, encompassing the 764 strategy and the 764 hypothesis and philosophy, if you like, the ideals that I take from that to apply to the MT. So we've got momentum, bullish trend, great, but you know that price action is still going to respect certain fib levels. So look at this, it went here, 764, bounced off, went there, retest, double top, bounced off. Then finally, you know, when it cleared that, look, it did it after, but it had to retest. So there is purpose and method to the price action. Then we went up, hit my target, done. And how many hours would that have been to get up there? Well, it was the next day, wasn't it? So we had positions on, and we took some money, and yeah, managed it, and got in again, and made a little bit, and grabbed some in the morning. Those of you that trade with me, I'm up early, about 5, half 5. So I'm in and start, I'm ahead of this move, and I'm already looking, still bullish. Let's just buy a little bit and bag a few quid here and there. So that's what I do. And it's as simple as that. So hopefully this video will give you some idea of how to backtest, but also how I look at things in a real live market. As I say, I'm not doing much backtesting anymore these days. My testing is more forward testing, but hopefully you can see how the backtesting and the forward testing, they come hand in hand. So you have to do a backtesting first, and once you've done your backtesting, then you start doing your forward testing, which is basically applying what you've learned to real life scenarios, what is going to happen, and you can see just by price action, you can narrate it, you can almost forecast it. And trading is really that simple. And I mean, once you take your emotions out of it, because even for me, you see, my emotions were a factor in making money here, and they affected just how much money I was going to make. So you can see that is the only element, the psychological element. Personal development is key. 80% is you, is personal development, understand your strengths and weaknesses. 20% is about putting a trade on. And sometimes you might even miss the trade. But I have 3 strategies that help me capture something from these moves. So even if I'm making 0.5% when I could have made 3%, obviously I'm going to be a bit pissed, but I'm still making money. And some days I'll have great days where it more than makes up for it. So, it's not an exact science, and it's not always going to work out sweetly, but hopefully you found this very informative, and hopefully you get a bit more insight into how I use my MT strategy and how I use it alongside my other strategies. My next video is going to be all about the divergence, which is this awesome oscillator. Someone asked me about that. We're going to go into that into a little bit more detail in my next video. Thanks for listening. Thanks for watching, and I'll see you in the next video. Thank you.